Hi, everyone. I'm Brittany Lewis, a breaking news reporter here at Forbes. Joining me now is Steven Ehrlich, Director of Research for Digital Assets. Steven, I appreciate you hopping back on once again.
Yeah, thanks, Brittany.
I do want to take a look forward to 2023 in terms of crypto. We're about a month in, and you wrote this. Mark Twain is famous for saying that history doesn't repeat, but it does often rhyme. The same can be said for crypto. Before we get into what you're seeing for the next year, I do want to take, a stroll down memory lane. And can you bring us up to speed from 2017 to 2022?
Sure. And yeah, thanks for the question. It's really funny. As I was kind of sitting down and writing sort of my primer for 2023 and what to expect, as you mentioned, it's always helpful to look back. And despite crypto's relatively short history, the Bitcoin white paper was only released 15 years ago, which actually is kind of amazing that it's been that long, but it's still relatively short. Um, it's been pretty cyclical, not just in market cycles, but just in how the technology, the ecosystem has developed, sort of surged up, came back down, then surged up a little higher and back down, and so on and so on and so forth. And there's been a number of big resets in crypto that have led to further development of the ecosystem. For instance, when Mt. Gox, and this is actually going to go all the way back to 2014, when Mt. Gox, which at that time was the biggest Bitcoin exchange in the world, and at its peak handled 80% of all Bitcoin trading, collapsed. That led to the need for regulated and relatively compliant exchanges such as Coinbase and Kraken. Those were two that were founded around that time. Obviously, the collapse of FTX proves that we haven't quite met that bar completely yet, but that did show some of the development. And then in 2016, when the DAO was hacked, which was essentially a decentralized autonomous organization, sort of a decentralized venture capital pool on Ethereum, got hacked and actually created an existential threat to Ethereum. That led to the creation of DeFi, decentralized finance organizations, and a lot of the different tokens that we have here today. But to get to your question, I was kind of looking at this in 3 to 4 year cycles. In 2017, that was during the ICO surge. ICOs stand for initial coin offerings, pejoratively, because a lot were scams. They're seen as sort of like a junky digital IPO. But all the hype, all the euphoria about them led to Ethereum climbing, Bitcoin climbing up to that point almost $20,000, which was I think about a 75% increase year on year from where it started 2017. And that entire year was punctuated by the launch of Bitcoin futures contracts from the Chicago Mercantile Exchange and the Chicago Board of Exchange. And that was at that time seen as sort of Bitcoin coming of age, being accepted, because now institutions had a way to directionally bet on Bitcoin. Obviously, for people to follow prices closely, especially when it comes to derivatives, you can bet go long or you can short and bet that the price is going to go down. A lot of institutions finally saw a chance to directionally bet against Bitcoin. And I think just a lot of the steam from the ICO boom that was that basically probably was not quite earned all fell out. And in 2018, the market collapsed about 75%. 2019 was sort of like a muddling year where the industry was trying to kind of figure out where it was going to be. There was kind of a push and pull between, do we need purely decentralized and permissionless blockchains like Bitcoin and Ethereum, or what's known as permission blockchains offered by projects like Hyperledger or Corda and plenty of others, where they offer more bespoke type functionalities and they're not open for anybody to participate. Only authorized users can join. But like the big note in 2019 was when Facebook launched what was then known as the Libra project, which was a stable coin, or designed to be a stable coin, that was going to be backed by a basket of currencies. And to be perfectly blunt, it scared the hell out of a lot of people, especially folks on Congress that weren't quite sure what to make of it and were afraid that they were about to lose their power to essentially operate monetary policy, institute monetary policy, which that, along with the legitimate use of weapons, are really two foundational roles of government. So it was kind of a middling year, and then we were kind of waiting for the next catalyst to figure out what was going to happen, where crypto was going to go next. 2020, everybody remembers, especially in the very beginning when COVID started to kind of really take hold, especially outside of China. Markets panicked. March 16th, Black Thursday, is a day that I think anyone in the financial world will remember when just markets completely crashed and Bitcoin fell to about $4,000. And there were some real questions about where the industry was going to go, because everybody was looking for liquidity, everybody was trying to get the US dollar, and people were scared of COVID. Obviously, then we remember what happened next with trillions of dollars being injected into the global economy from the Fed and other central banks around the world. Led to a big run on risky assets, tech stocks, but obviously crypto and Bitcoin was kind of the perfect mix of all this, because it was sort of like a scarce source of digital value, which was beneficial in a world with cheap, free, easy money. Something that is more scarce, obviously, should have some increased value. And on top of that, people also saw it as a tech stock, so kind of traded at both. So it was turbocharged. Bitcoin ended up running up throughout the year and touched around $70,000 twice in 2021, once in April when Coinbase went public in the largest direct listing in history on NASDAQ, with a market cap of $86 billion. And then again in November of that year when the first Bitcoin futures ETFs were approved by the SEC. And then, of course, we saw the climb down again from everything that happened in 2022 in crypto, the rising interest rates around the world, inflation in the US, the highest in decades. And then all of that obviously was punctuated by the string of spectacular failures and bankruptcies and collateral damage stemming from the Terra Luna crash to FTX to 3 Arrows Capital to now the Genesis Digital lending, filing for bankruptcy, BlockFi, and we're still trying to figure out all the collateral damage from there.
Steven, what you described has been a really tumultuous 5 years, and 2022 has had really, ominous economic news, 40-year high inflation, a looming recession, interest rate hikes from the Fed. Does that impact the crypto market immediately, or is it a delayed reaction?
It's a good question. Typically, because especially when institutional money really entered the space starting in August 2020 and kind of carried on throughout COVID, that money, as much as it was celebrated by crypto enthusiasts because all prices started to go up and to the right, it forced crypto to trade much like tech stocks. They use the same frameworks, the same approaches, and essentially put Bitcoin into the same buckets as the risky tech stocks. If you ever look at kind of the correlations between Bitcoin and tech stocks back in like the ICO bust in 2018 and 2022, it's night and day. In 2018, it was pretty uncorrelated. In 2022, it's very highly correlated. Now, so when you do see changes from the Fed, stocks and Bitcoin tend to move in a similar direction. And I think yesterday even was just another example of that. I mean, Bitcoin surged when even though rates got raised again by 25 basis points, because I think, for one, that was relatively well telegraphed, but two, I think maybe it's a bit of hopium that Fed watchers are getting a little bit more optimistic that central banks around the world are going to be able to safely land this economy without plunging us into a recession, or at least a very long one. So you do see those movements. I think a more important question might be like, what is the long-term impact of all that? And for that, it's really hard to tell, because I mean, let's be honest, a lot of Fed watchers are wrong. It's very hard to predict what's going to happen next with inflation, especially with an economy as complex as ours. We're still trying to unwind supply chain gluts. We have a super tight labor market. Inflation is still high, and I mean, how many people were talking about inflation being transitory, and it turned out to be much more persistent than other people thought. So, I mean, short term, yes, Bitcoin does tend to react in a similar direction to other risky assets when it comes to the Fed, but the longer term, it's hard to know for sure.
And obviously, 2022 ended on a really sour note for the crypto industry as a whole. I mean, anyone who's not even in the weeds of crypto has seen headlines of FTX and their fallout, as well as Sam Bankman-Fried. So how badly did the FTX scandal impact the crypto industry?
It was pretty devastating. I mean, for one, for folks that hadn't heard of crypto, obviously they've heard of it now. I mean, just look at the segments that were done even on late night comedy shows that never touch crypto, like the Seth Meyers and Jimmy Kimmel's of the world. And Sam Bankman-Fried's picture has been plastered all over the world too. I
He's
mean, one
almost
of
a
the
household
reasons,
name at this point.
yeah, he is, or at least SBF, or the curly hair guy that looks like looks like computer help that managed to orchestrate one of the biggest financial collapses in history. And I remember when they were going over his bail arrangement. I mean, one of the reasons why he wasn't a flight risk was because he essentially would be recognized anywhere in the world at this point. I mean, it became that level of notoriety, and it really, at least in the short term, it obviously did a disservice because one of the big focuses of Sam Bankman-Fried, especially in 2022, was going to DC, spending time hobnobbing with senators and members of the House of Representatives and SEC commissioners and CFTC commissioners and all types of regulators in order to try to I guess create ostensibly friendly regulation to crypto. There's a lot of debate as to whether or not he was trying to create self-serving regulation to sort of help FTX more than some of the other competitors, and perhaps do a disservice to decentralized finance and some of the more open and private use cases for crypto. But that could be a debate for another day. But all of that work has not only been thrown out, but it's put egg on the face of some of the lawmakers that were publicly associated with him, and certainly it begs the question, like, what is the relationship between the industry and Congress, and what is an appropriate relationship between the industry and lawmakers and regulators in order to kind of help steer this industry through. It's important to have input from industry because they know it better than members of Congress do. Just for nothing else, they can focus on it 100% of the time. Lawmakers have a lot of other concerns beyond just regulating crypto. And that's kind of forced everyone to take a step back and look. And at some point, I had a sense that we're making progress on getting some helpful regulation. And with everything that's happened and the millions of investors that have been hurt in the U.S. and around the world from all this, they're certainly going to take a much more stricter look than perhaps they would have before, in order to sort of stay on the side of caution when it comes from a risk reward calculus.
And where are we in terms of regulations? Obviously, this sent shockwaves, around the world and really perked up the ears of lawmakers. In 2023, are we going to see any regulations take place?
I mean, I certainly hope so, because there's important questions that need to be answered. I mean, chief among them is, how would you categorize a digital asset? Is it a security? In which case it would fall under the purview of the SEC and Chair Gary Gensler. And also, if that's the case, then that would create some really important questions for all the exchanges in the U.S. that sell different types of digital assets and have not registered as security trading facilities with the SEC. If assets are commodities, then at least like their spot markets and derivative markets would fall under the remit of the Commodity and Futures Trading Commission, the CFTC, and really, like, that's one big line in the road of delineation that has to be made, because like I've spoken with commissioners of both of those regulators, and they say the right things and they want to work together, but nobody knows. And just the nature of competitiveness. I mean, this is kind of like a trophy regulatory opportunity, and both want to have primacy over it, either because they genuinely think that it belongs to them, and I think they both genuinely do think that largely crypto belongs to them, but also because of just the attention that it's getting. And then there's even other more important questions, like a stable coin. It sounds like it should not be a security, because a stable coin by its very definition should not change in value, and the definition of a security starts with it being an investment contract. But there are some nuances behind the scenes of that make it less clear whether or not Congress thinks that a stablecoin is a security, or perhaps certain stablecoins are securities and certain are not. And there are a bunch of different bills competing, going through different stages of drafting within Congress, called the Responsible Financial Innovation Act, which I know has been getting a lot of bipartisan support there. And I'm optimistic, I'm hopeful that we are going to see legislation, because that can also help just settle these turf wars between the regulators. I mean, they have to abide by whatever whatever constraints or contours they are given to from Congress. And I think at this point, we do need a congressional solution. Of course, we also live in the real world, and we're in a very harshly divided Congress where with a Republican majority of, I believe, 4 seats. And it's hard to see. I mean, right now they're focused on things like the debt ceiling, and it's hard to see much of any legislation really passing. But I do hope that bills like the Responsible Financial Innovation Act, which does have a degree of bipartisan support, will be able to see its way through.
That's exciting that there is bipartisan support around this, because I wrote something down that you first said that I found to be wild, and that is that there's no clear definition of digital asset. It's not defined as a security. How is it currently defined? And how, I mean, from the top, you went through 5 years of the lifespan of crypto, and that's not even the beginning. So how has it taken this long to define what that is?
Yeah, I mean, in some ways, like a digital asset is kind of like a Rorschach's test, that people can see in it what they want. And the truth is that it's hard to just put it into one particular silo. Typically, ways that regulators, at least in the U.S., delineate securities from commodities, from perhaps like a currency or something else, is through the Howey test, which kind of uses 4 prongs, looking at whether or not there is an investment of money in a common enterprise with the expectation of profit largely due to the efforts of others. So when you go through this test, I mean, the investment of money is usually pretty self-explanatory because people have to buy crypto on exchanges. Common enterprise, I mean, that's kind of a nebulous phrase, but most of these projects have a team behind them, that with a CEO or a founding team, developers. Expectation of profit, I mean, that is a big one. A lot of tokens out there say they have utility, sort of like a carnival ride where you have to hand a ticket to go on the merry-go-round. And so technically there is some utility, but if you ask a lot of people honestly, they're not buying a token in some sort of data storage decentralized project so that they can use that storage as opposed to Dropbox. They're doing it because they hope it's going to go up 10x or 100x in value. And then the expectation of others, this gets into the real question of, okay, how decentralized is this project really? Is this founding team actually like exercising meaningful control over the project, or is it truly in the hands of the community? And to make things even more complicated, even some of these like decentralized protocols are called like dinos, or like decentralized in name only. Because, and actually I did some research into this. It's on my wall behind me, looking at some of these DeFi protocols where if you actually look at the voting patterns and voting power, typically 1 or 2 institutional investors have the ability to propose and pass any proposal that they want, or reject any proposal that they want. So then it even comes down to like, what does decentralized governance look like in practice? And that's just one example of just showing how complicated this type of stuff is. And on top of that, like things can change too. Like something might start out centralized and eventually cross a threshold into being decentralized. SEC Commissioner Hester Peirce actually put together a proposal. She called it a safe harbor proposal, where teams that kind of went this course would be protected from security law enforcement for a period of time, and then once they've been sufficiently decentralized, then they're out in the wild and they have to stay that way. That never got put into action, but I think that kind of just is one example to show you how complex these types of questions can be, and why it's so hard to get clear answers from Congress, the SEC, CFTC, or anybody else.
Hopefully in 2023, we can see some clear answers. From what you laid that out perfectly, but what you're describing is really complicated. Another word that comes to mind is messy. You actually wrote that in your look ahead. You reported that crypto is entering a transition period, and you described it as messy. Major transitions of any kind usually are. So, Steven, how big of a mess are we talking here?
I think it's going to be pretty messy. I mean, I wrote that my background is actually in geopolitics and looking at like democratic transitions. And when I was looking at that, I was actually thinking of, in some ways, the Arab Spring, when you remember all the different countries that overthrew autocratic leaders, tried to install democracies, and unfortunately most did not. But that was kind of my background when I was writing that. But any sort of period of upheaval is very traumatic and difficult, and we've spent some time talking about the legislative, the regulatory challenges that are going to that hopefully are going to be solved this year. But one other really big sort of like elephant in the room out there is like, what's going to happen with the players in crypto that are still standing? I mean, Genesis, which was the biggest lender in the world, a counterparty to basically every other major crypto trading partner in the industry, has filed for bankruptcy, and there's a multi-billion-dollar hole on its balance sheet, and the industry is trying to figure out if there's a way to have a quick resolution to this so that any further collateral damage will be abated. But on top of that, I mean, Binance now is the 10,000-pound elephant in the room. It was already the largest crypto exchange in the world, and then when it took out FTX, wittingly or unwittingly, depending on how you see it, focus is now squarely pegged on this company that few people understand, still does not actually have a headquarters, as difficult as that is to believe. And recently, like, we've been seeing some troubling signs from them, in the sense that they've been commingling customer funds with collateral that's used to back up stable coins that they issue, which is a major no-no, especially in light of what happened with FTX and the lack of controls over segregating customer and exchange funds, and a lot of people I talk to are they don't know what they don't know about Binance, and they're worried about what would happen to the industry if Binance collapsed by way of FTX. The industry has actually been able to absorb FTX. The Bitcoin price now has actually recovered everything that it lost from back in early November when it did collapse. But if Binance turns out to have similar problems, and I'm not saying here that they do, but if they do, that would be very problematic for the industry, at least in the short term.
There's a lot to unpack there, but first I do want to ask you about Binance. Do you think there needs to be a further investigation into Binance? They don't have a headquarters, like you said. Is it confusing on purpose almost?
I don't necessarily know that they're doing it just to create confusion. I've interviewed Binance CEO Changpeng Zhao, or CZ, as he's known in the past, and I mean, he's been forthright in telling me that the company took a ask for forgiveness, not permission approach to regulation, especially in the previous couple of years.
Is that legal, that approach?
I mean, it depends on
what you need to ask for.
Well, no, it depends on the circumstances. I mean, it's the same approach I think that Mark Zuckerberg took when he was trying to build Facebook, or obviously Travis Kalanick did when he was hyperscaling Uber around the world. I mean, there is an argument to be made that if you always wait for regulations, you'll just be waiting forever, and there's somebody that will pass you. So, I mean, I can understand that sentiment in some regards, but if you're going to do that, you have to be hypersensitive to customer welfare. We actually published a story a couple of years ago, a colleague of mine, Michael Del Castillo, where he reported that Binance set up a U.S. affiliate as essentially like a misdirection for U.S. regulators, where they would focus on that so Binance could continue servicing the U.S. market unabated. So there was a certain degree of all of that. Binance now, I mean, they are getting licenses in countries around the world, in Europe, Middle East, I know, in Asia. I mean, they are saying and doing the right thing, so we'll see what happens there. And your other question about, like, was this all on purpose too? I mean, Binance was also designed to be a bit of a decentralized company, and I know that CZ hands a lot of autonomy off to his different teams to build new products and grow in country. So some of that was necessarily by design, and I'm not trying to imply that there was been malign intent here, but just the business model that Binance put together was sort of customized for super rapid growth and lots of innovation, lots of iteration, and regulators essentially were just being asked to come along for the ride if they wanted to.
Steven, I think that really begs the question, how is trust doing in the crypto space going into 2023? I mean, you're talking about bankruptcies. We've seen the FTX fallout. I mean, SBF was compared to Bernie Madoff of the crypto space. So is trust faltering into the new year?
It certainly is. And it's an easy analogy to make like Sam Bankman-Fried to Bernie Madoff. I've asked that exact question to Sam. Like, how do you feel about being crypto's version of Bernie Madoff? And he kind of bristles at it because the first thing he'll say is that unlike Bernie Madoff, where his business for decades seems to have just been completely made up, Sam had a real business, and his argument is that he ran it poorly, but FTX was a real business. But getting back to crypto, I mean, trust has to be at I don't know if I'd say an all-time low because you need real data to support that, but trust, it's obviously been severely shaken. It was always kind of climbing an uphill battle because just the nature of crypto is hard for people to grasp. One question I still get over and over again is, what is the intrinsic value of Bitcoin? Because it's not backed by anything. To most people, it's just a line of indecipherable like alpha and numerical figures. And even though I still think a lot of Americans think that the US dollar is backed by gold, at least they get that it's official fiat currency issued by the government. And so, like, why is Bitcoin worth anything? Why are all these other tokens worth anything, especially when usage on the platforms perhaps isn't commensurate with the very large market caps that they have? And so now with all of this, plus the collapses, it leads to a lot of important questions. One argument that people say, or one argument that I hear from industry insiders, though, is that maybe this is good for crypto because all of these collapses had absolutely nothing to do with crypto's core tenets of like decentralization, privacy, security. It was all more or less like centralized trading and leverage, so like importing some of the worst practices from traditional finance into crypto. And I would imagine a lot of crypto insiders and holders of these tokens were thrilled to all of a sudden become millionaires and billionaires with all this. But then obviously financial speculation has been going on for centuries, and when the froth kind of dissipates and reality sets back in, everything comes back down. So the argument that you'll hear a lot is that these were not issues with crypto, but this was like imported cancers from the traditional financial world. And maybe one real question is whether or not there is an opportunity to build crypto and continue to build it in subsequent years without bringing in these certain elements of centralization that seem to be problematic from time to time. Like, one big push and pull is just like, is it possible to be decentralized and innovative? And there's a reason why we have corporate structures. There's reasons why we have companies in the world and organizational charts and flow charts, because that's one way to be an efficient organization.
With all of that being said, I guess, what does this mean for the typical person going into 2023? Are you optimistic, pessimistic? Do we need to brace ourselves? What's next?
So moving into 2023, the year's gotten off to a really great start. I mean, Bitcoin's up, I think, 37% year to date so far. I mean, certainly it was down, I think, like 65, 70% in 2022. So that context is important, but markets growing up, crypto is outperforming NASDAQ, the S&P 500. Ether's up 30 something percent. We're seeing other tokens like Optimism, which is a token used on a scaling network for Ethereum, that is up like 130% so far on the month. So there is some excitement there. But I would still exercise a bit of caution here. I mean, is this really kind of like a bear rally, or are we actually turning the corner? I'm still skeptical that we've turned the corner. I mean, as much as people were excited about the 25 basis point increase from the Fed, if you look in some of his comments, Chairman Jerome Powell still said that inflation is persistent and that they're insistent on bringing it down to 2%. So I still think the economy is going to feel some more pain. Prices might still come down. I'm also disappointed to see some of the real fraud that's coming out of the market. Like, there's one token called Aptos, which was founded by a few ex-Facebook engineers, that is up something like 400% year to date. And my sense is that a lot of this is due to what seems to be restrictive token economics and just hopium more than any real world usage. And in some ways, it's disappointing to see prices just surging up in a manner similar that we saw in years past when folks knew that it was unsustainable. So important to kind of keep all that perspective. I am optimistic overall for the direction of the crypto market in 2023 because of how painful 2022 was and how acutely painful it was for crypto, because aside from just the market downturn, it had to deal with all the bankruptcies that the rest of the market did not. But I would caution investors to just remember why you invested in crypto in the first place, and don't think about this on a day-to-day or week-to-week or even month-to-month basis. Now, most VCs invest in crypto projects hoping to see a return in 5 to 7 years, and I typically suggest that people take the same approach as well. If you have money that you're going to need a month from now, don't put it into Bitcoin, because you could lose half of it. You could lose all of it. Certainly, you could also go up 400%, but is it really worth that risk? I mean, this is an alternative asset class that's should be treated as such in investment portfolios.
Steven Ehrlich, I really appreciate your outlook and your insight. Thank you so much.
Great. Thanks for having me.